want to take a closer look now at Bank of America from both the analyst and investor perspectives. With us here in studio is Brian Charles. He's an analyst at RW Pressprich. Now, according to data compiled by Bloomberg, he is one of the most accurate analysts covering Bank of America. We call him a Bloomberg best. And then also joining us on the phone is Jonathan Finger of Finger Interests in Houston. He owns 1.1 million shares of Bank of America, and he's been highly critical of the company management. Gentlemen, great to have you both here with us. Jonathan, let me start with you. BofA, big news. Investors seem to like the news. Do you think that they're wrong in bidding up this stock today?
No, I think this is generally a positive from a number of standpoints. Obviously, it reduces the uncertainty on BofA's future mortgage exposure. I think the settlement amount was within investor expectations, and this should allow for better estimates of the remaining exposure on the balance sheet.
Brian, let me get you to weigh in on it. Talk us through the news that we got through BofA today. There was a lot of investor enthusiasm. What do you think?
I think it's certainly a positive data point, and it's substantial progress from the company standpoint. This is essentially a settlement with private label investors. And to date, we had not had much data regarding what those settlement costs were for Bank of America.
So getting some clarity.
Exactly. And the bank has been adopting a pretty aggressive posture regarding litigating these charges. And I just, the street just doesn't know exactly how much that would actually cost the company over the long term. So that they have settled actually more than half their actual exposure today gives us some very good guidance as to what their ultimate exposure might be.
Jonathan, are you concerned about that lack of transparency? Because the overhang could be any number. It could be any multiple of billions of dollars, right?
Well, look, this is another data point, so it does give us a little better way to estimate future exposure. And management has consistently been a little bit, they've underestimated their future exposure on mortgages. They've had to increase the estimate over the past 2 quarters. So there is still considerable uncertainty, and I think the question is, will the bank have to raise more capital?
Let me ask you guys, Brian, let me ask you, because we know Jonathan's been critical of BofA management. Are you concerned about their ability to really estimate the cost to the company overall, since they've been underestimating some of these mortgage costs to the company?
I think they are difficult estimates to really pin down.
So you don't fault them for having a hard time?
I don't really fault them, but I do think that there'll be more mortgage charges coming down, certainly. But at least from my recently revised estimates, this seems to be in track with what I think the overall private label exposure would be. Now, away from that, they still have some monoline exposure. Again, we've had some guidance regarding their settlement with assured guarantee for what that ultimately might be. And they've had a pretty good track record with the GSEs, so I don't think that's been too hard to estimate.
Guys, what do you want to see happen at Bank of America? Josh Rosner I talked with earlier and just caught him off air, and he talked about Bank of America actually being a bit of a lag, a big drag actually on Merrill Lynch. I mean, Jonathan, you own the stock, 1.1 million shares of BofA. I mean, do you want to see BofA unleash some shareholder value here potentially by getting rid of Merrill Lynch?
I'm not sure that's the best move at this point. I think what's important for them to start to do is to try and demonstrate what is the future earnings power of this franchise and where is growth going to come from. And I think that's the big question in investors' minds. First they want to get the legacy issues behind them, but they're also looking forward to find out where is growth going to come from and how much can the company ultimately earn.
Brian, Jonathan makes a good point there. You've got the problems, obviously, with the mortgages. You've got a lack of trading revenue growth. You've got a lack of loan growth. And Paul Miller from FBR says this is the one big money center bank that's going to have problems raising the Basel capital. Is that a concern to you?
I do think they are going to be challenged to raise Basel to the levels that their peers are. But when I look at the stock overall, I see a pretty attractive upside opportunity here that I'm not sure I see with other big banks. At the stock where it's trading right now, I guess $11.20 or so. I can see that over time getting to at least $20 and possibly $24 in a very normalized environment. That's assuming they've got all their mortgage problems behind them and they just generally realize normalized losses in mortgages. And that's more than a 100% upside that I just don't see with JP Morgan or Wells Fargo or Citigroup right now.
Jonathan, is that why you guys own BofA at this point?
Yeah, that is. I think we agree that the ultimate franchise value is in the $20 range once you get to a normalized earnings number and get some of the mortgage issues put to bed.
Jonathan, what else would you like to see the company do at this point? I mean, you've been critical of management. Do you want to see Moynihan out at this point?
No, I think it's time to give management an opportunity to work through the problems, but I would like to see management start to articulate some strategies to turning around some of these businesses and growing these businesses.
Brian, 5 seconds. You have confidence in this management at this point to do what needs to be done at BofA?
Yes, I have confidence in the management and also the earnings power of the overall company. I think they can absorb these losses.
Yeah, you definitely like it. All right, going to leave it there. Brian Charles, thank you so much. Jonathan Finger joining us on the phone. My thanks to you as well.